Are you ready to overcome the complexities and burdens that come with your success? Join the team at Centura Wealth Advisory in the Live Life Liberated podcast. Now, on to the show.
Hello and welcome to Live Life Liberated with the team from Centura Wealth Advisory. Today, Derek Myron is in front of the mic. He's got a special guest on the show, and that's Brent Glova. Brent is the managing director of Vantage Point Advisors, which was founded in 2005 in San Diego. They are a leading provider of valuation services for transactions, tax, financial reporting, regulatory compliance, and litigation support. Derek, sounds like you got a great guest on the show today. What are you guys talking about?
We're going to talk about all kinds of things that are going on in the valuation world, and I'm just thankful to be back here with you today, Eric. So thanks for having us. Brent, welcome to the show.
Yeah, thank you for having me. I'm happy to be here.
Great. Why don't you kick us off, Brent, and tell our listening audience about your background, education, and family before we get into valuation services?
Sure. Yeah, so I'm originally an East Coaster. I'm from Pennsylvania, born and raised. I started my professional career at Standard & Poor's Corporate Value Consulting, which was then bought by Duff & Phelps and then taken public, actually. Duff & Phelps kind of became the largest global provider of valuation services. Is a pretty well-known global brand at this point, maybe the largest one. You know, that's how I started my career. That was after graduating from Penn State with a degree in finance, my very beloved alma mater. After working at Duff & Phelps for a few years, I actually went into industry and worked in corporate development for a few years for a public company, kind of structuring acquisitions and deals and doing some general corporate finance. That was, all kind of on the East Coast again, Philadelphia, a little bit of work in New York. And then after spending a couple years in industry, I wanted to get back to the consulting side of things and found my way to San Diego. And I've been here for over 10 years now and have been working in valuation consulting all of that time. I've been with Vantage Point Advisors now for about 8 years, I think it is. Then there's family-wise, I'm married to also a fellow Pennsylvanian and Penn Stater. My wife Carly owns a recruiting firm here in town in San Diego. And Carly and I have 2 terrific daughters. Bryn is 4 and Riley is 1.
Sounds like you and your wife have your hands full. Lots of things going on at the Glova household. Let's talk about Vantage Point and Vantage Point's ideal client. Who do you guys serve and serve well?
Yeah, so this is an interesting one, Derek. I know that, every sales training and networking group that is out there tells you that you should really have your ideal client defined really succinctly. I can say that I don't, and that's with good reason. Vantage Point is a really diverse firm in terms of our offerings for valuation services. And what that means is we can kind of do anything that encompasses business valuation. And what that equates to in terms of clients that we work with is it's really a full spectrum. We work with billion-dollar market cap public companies all the way down to, smaller mom and pop construction companies locally here in Southern California or elsewhere. So it really runs the gamut. And so to say, my ideal client is a middle market PE-backed company with $50 million in revenue, it's just not really the case because what we do is so diverse and the clients we work with is equally diverse.
So it sounds like both on size and industry, you guys are doing valuations across the board for business owners in Southern California and across the country.
Yeah, that's right. I mean, I would say personally, I have a couple specialty industries. I work a lot in the biotech and life science industry, and that's, being headquartered here in San Diego, that's kind of naturally fits with our homegrown economy. I also do a lot of tech, breweries, but that's not to say those are the only 3 industries that I work in. It's really across the board.
Well, that's great, Brent. Tell us about what are the key differentiators that distinguish VPA from your competitors? What are the things that your clients say or do you believe are the key differentiators that you guys offer at VPA?
So I'd say the one thing, and this is kind of the value prop that we always put out there, in marketing and kind of client onboarding and prospecting, all of us at the senior level have come from, kind of the big global valuation brands. Myself from Duff & Phelps, others from Duff & Phelps. We've got people from Houlihan Lokey, Goldman Sachs, the valuation groups of the big four accounting firms. So we've all kind of been trained and built our expertise at the really, the largest global brands in terms of valuation. But we've basically taken that expertise and experience to a boutique setting where we can offer, that same level of expertise and technical acumen, but, with a better level of client service, much higher responsiveness. And, because we're kind of operating in that boutique setting, a smaller company is not going to get kind of brushed under the rug or put aside as not really a high priority. We're basically able to offer the same level of service to all of our clients, depending, and essentially size doesn't matter. One of the other things that I would say, there's plenty of boutiques out there, obviously, and a lot of boutiques will market themselves as really full service. And in fact, that's really not true for a lot of boutiques. There's certain areas that other valuation boutiques say they can do, but maybe really can't. Can they really do the public company derivative valuation that needs done? Maybe not, but Vantage Point can. Or, on the flip side of things, do they offer kind of litigation support and forensics and divorce valuation in addition to everything else that they have? And so that's kind of where we differentiate is other firms say they're full service, and we, I think, really truly are. And I think, our clients would attest to that based on, the work that they do with us and their experience working with different managing directors, different teams within VPA that kind of help them with all of their different needs.
Sounds like you guys need a counter for the number of heads because it's occurring so quickly at VPA.
Yeah, we've made a bunch of really great hires over the past couple months as we continue to grow. We've got a bunch more kind of in the pipeline. I was just going through this with our HR the other day, but there's probably there's at least a handful of hires that we still need to make. And when you're talking about that number for a firm that's 20 or 25 people as it is, it's a big deal. So got a lot of growth and a lot of growth in headcount planned as well. So it's pretty exciting.
That's fantastic. So it sounds like the market must be extremely busy with you guys hiring this many folks. What do you see in the marketplace today?
A lot of things, but I think a good way that I've been kind of summarizing this to kind of peers and clients is, and it's kind of a trendy and a bit cliche term, but I'm going to use it anyway. FOMO, fear of missing out, if you're not familiar with that, or maybe in a financial sense, fear of missing opportunity. And I think what that means is, we are busier than we probably ever have been in our 15-year history of the firm. And it's really this FOMO concept. Business owners, high net worth individuals, they're feeling like they need to take advantage of the now because no one really knows when the window in time that we're in right now is going to close. And so there's this urgency with everything. And that's really what's been driving us to be so busy, right? And then the concepts there, valuations are really high right now. The U.S. equities market seems to set a record, every other day. The M&A market's raging, and the 2021 tax landscape, probably looks a lot better than what the 2022 tax landscape is going to look or thereafter. So that's creating this fear of I need to do this now, and that's driving a bunch of different valuation needs essentially.
So I think the probability of 2022 looking worse from a tax perspective than 2021 is probably a very high likelihood. We hear that from our clients as well. You said the Vantage Point is the busiest it's ever been. Why don't you drill into what's driving all that work in new clients? Can you kind of segment out that for us today?
Yeah. So I said earlier that we are really diverse in what we do and the offerings that we have. So I don't know. I can list a few that have, kind of made me so busy over the past year or so. And that's not necessarily what's making all of our people so busy, but it's, probably a lot of it. So I'll kind of go down the list. The first is IPOs. We do a lot of pre-IPO financial reporting work, which, is really complex, needs to be done in a really short time frame to basically get companies SEC ready with their financial statements and then to ultimately go public. And then, here locally, there's been a few signs in the biotech IPO market, which is, a big portion of the IPO market over the past year or two. It's probably somewhere about half of the IPOs. There's been some signs that may be cooling. So again, there's this urgency for companies that were contemplating that path to accelerate their timeline and kind of, again, do it now. Also, kind of on the go public side of things, there's SPACs, special purpose acquisition companies. It's kind of the same concept there, where there's again been some signs that the SPAC market is cooling a bit. And so there's this rush to kind of get out and form your SPAC, find your deal sooner rather than later. There's also a really interesting thing that happened about, I guess it's 2.5, 3 weeks ago. The new SEC chairman came out with essentially some new accounting and valuation guidance that was, essentially created to cool the SPAC market, or at least put a pause on things. And the result of that was this huge influx of valuation work need to help these SPACs kind of fix their financial statements under this new guidance. And so, there's been myself and some others at Vantage Point. That's what, the past week or two has really consisted of, is, fielding calls on how to address this stuff and then kind of building financial valuation models for a concept that had never really been out there before. So that was kind of a pivot and react very quickly to kind of help some of our SPAC clients. So in addition to the go public route that's really kind of keeping us busy, there's also the stuff that we're working on, kind of during any cycle, but there's the volume right now is a lot higher, and that's, kind of M&A support, valuations, and Esops. So Esop transactions, again, are hot for a couple of reasons. Again, valuation's high, tax picture looks good this year in comparison. And so you have a lot of baby boomer owner founders that are evaluating that path, or have been evaluating that path for a long time. And now they kind of think, let's get this transaction done in 2021 while, again, that window is still open.
Brent, can you define what is an ESOP?
Yep. So employee stock ownership plan. And I think the easiest way to break this down simplistically is it's basically the original owners of the company create an internal transaction and effectively sell a portion or the entirety of their company to the employees, and basically take chips off the table over time via, some upfront consideration perhaps, and a note, a seller finance note, maybe some bank financing, but it's essentially a friendly internal transaction is probably the best way to define it.
Okay. What else is happening in your market? How about estate and gift? How hot is that market for you this year?
Yep, Derek, this is one that I think all too well, but that is one of the probably the biggest drivers that's keeping us busy, and I think that volume is only going to pick up the second half of the year. But essentially, we're doing a lot of estate and gift planning valuation work, and the reason for that is a lot of business owners are kind of operating under the assumption that the gift tax exemption will be greatly reduced in 2022 and beyond, and that perhaps the gift and estate tax rates will increase as well. I think for the 99.5% Act, the original version of that came out, we were talking about reducing the gift tax exemption from 11.7 million for couples down to 1 million. And, the top tax rate on on gifts was, some astronomical number that Derek, maybe you know better than I, but significant increases and really a change in the landscape. And so, who knows if that will actually pass at those levels? It's probably unlikely. But either way, everyone knows that the gift and estate tax situation is going to change next year. So there's a big rush to get all of the generational gifting and estate planning work kind of done this year in 2021.
Absolutely. So Bernie Sanders publishes his 99.5% Act on March 25th. And since then, you see all kinds of different things being published, whether what Biden said or what other senators have published. What we do know is each of those things is like a little pebble into the pond, causing waves, causing clients to take action. The date they publish this tax act, we are already deluged. I cannot imagine what will happen. Those are little pebbles hitting the pond. It's like a mammoth boulder will hit there, and the wave that all those professionals that serve those families, it's going to be crazy, in my opinion. Brent, with all the valuation work keeping you so busy, have you seen valuation methods pivot as a result of the COVID-19 pandemic, this past year's market volatility, or the current valuations of the equity markets? How have you seen things change over this past year?
Yeah, it's been a pretty wild ride to try to keep up with pretty ever-changing valuation landscape. I will say that the core valuation methods that we use never really change, but the reliance on certain methods kind of pivots and evolves depending on where we are in a market cycle. So it's definitely been a wild ride. And I think everyone is fairly aware of kind of some general business valuation lingo. A lot of people, we hear folks talk in market multiples, right? 1 times revenue, 10 times EBITDA, et cetera. These are normally market multiples that are derived from, either public company valuations or kind of precedent M&A transactions that have recently happened in the market. It was interesting at the onset of COVID, kind of Q1, Q2 of last year, the general consensus among the valuation community was, we really shouldn't be, placing too much reliance on those transactions that have occurred, because all of the transactions, frankly, had occurred prior to COVID, and we didn't really know what the COVID environment was going to do to market multiples. The assumption was they were all going to go down. So to use multiples from pre-COVID times to value companies during COVID times, theoretically didn't make sense. So, last year we kind of pivoted away from relying too much on transactions, thought that the public company multiples and public company valuations were maybe more indicative of kind of current pricing. Then you fast forward a year, and the public markets have gone absolutely crazy, and things continue to go up. And now we're kind of faced with the challenge of, are public company valuations right now truly indicative of private company value? Yep. So with public company valuations, right, it's interesting, how does private company worth kind of keep up? And is that the correct assumption? Like I said earlier, we have a lot of IPO clients, right? A lot of our IPO clients historically would run a dual process, right? They would be, going down the path of potentially going public, but also kind of gauging strategic interest at the same time. What we've seen over the past year is most of them aren't doing a dual process, at least, in the sectors that we're doing a lot of IPO valuation work. And the reason they're not doing a dual process is because, they're basically hearing from strategics, Mr. Strategic says, we can't pay the valuation that you're going to fetch in the public markets. And so that dual process has been somewhat off the table. And, maybe from a valuation perspective, that is somewhat representative of how we should be looking at valuations, with a little bit less reliance, or at least some level of hedging on the public company valuations when valuing a private company. We also have the sometimes tough job of also trying to hedge against whatever market bubble we may see out there, or market bubbles. And that kind of becomes part of your job as a valuation practitioner is paying attention to those macroeconomic climates and making sure that the value today is actually indicative of, the future cash flows of the company based on what's going to happen at a macro level.
For sure. With the pandemic and the federal government saying we're going to drive interest rates down to zero, we're going to really loosen monetary policy and flood the market with cash, it has definitely driven valuations of stocks, real estate, and bonds to all-time highs. With that backdrop, what likely market bubbles are you seeing or do you think about in your current valuation work?
Right. Well, despite what I just said, this is always one of those tough things where I hate being in the business of trying to make economic predictions. And I'll also say that, I've probably been wrong for the past 3 or 4 years where I've told clients and peers, things can't keep going the way they're going, and they have. So I'll provide that qualifier before I give you one or two, Derek.
I think to be fair, Brent, though, you made those statements to clients and peers and whatnot, and what you didn't have the knowledge of is the federal government was going to spend $10 trillion to prop it up. So I think you get a little bit of a pass there.
Right. Couldn't have predicted that. But yeah, so a few bubbles that there may be worth mentioning, right? The first is the easy one that I think, Derek, you just kind of alluded to is, the public equities market. Even before COVID, we were on a 10-year upcycle in terms of valuation and market caps. How much longer can that go on? And then further, you see that I mentioned this a little bit earlier, but the valuation hierarchy is kind of flipped and inverse right now, right? I said that IPO valuations are beating strategics, and then even more interesting, you have private equity outbidding strategics and willing to pay greater multiples than strategics are willing to pay, with synergies baked in and everything. And that's an interesting dynamic that you certainly haven't seen historically. But, the public equity markets is definitely one. And then, you also mentioned real estate, Derek. You've got, both residential and commercial real estate. On the residential side, if you believe estimates out there, my house has doubled in value since 2015. Does that really make sense? Probably not, at least not to me. And then, you have the concept of the foreclosure and forbearance moratorium. What happens when that comes to an end later this summer? When was the last time you saw a foreclosure on the market? So that's an interesting concept on the residential side. And on the commercial real estate side, how do you repurpose, I don't know what the percentage is, half of the office space in the United States that is, underutilized right now? How does that repurpose and kind of go back out into the economy without creating some major financial impacts? I think we have to wait and see, but that's, the real estate bubble, both residential and commercial, certainly seems like could be an issue.
Sounds like there's a lot to digest for the markets over the next several months, seeing how some of these programs unwind and how much money is available to soak up these inventories. So we shall see. What advice do you have to business owners or high net worth families trying to navigate the current financial climate?
Earlier, kind of at the onset of this conversation, I mentioned that one of the factors that's kind of driving financial professionals like myself to be so darn busy is this fear factor of how long can this last? And, maybe that isn't entirely irrational to be thinking like that. We're certainly sitting we're sitting in financial high times right now. And that's, kind of despite the fact that we're in the middle or on the back end of a pandemic that really should suggest a different reality, right? So, the various paths that business owners have to liquidity, all of the things that I mentioned that were keeping us busy earlier are all red hot. And again, the tax situation is, we think is going to get worse next year. And certainly it's even more challenging here locally in California. So the time really does feel like now's the time, essentially. And I think what that means from like a planning standpoint is it's really important to start your process now. Again, now seems to be the summarizing point here. I think the average timeline of an M&A transaction is about 6 months. And so, if for liquidity, tax reasons, whatever it may be, you feel like you need to sell your business this year or you want to, it's almost too late. We're in May. So, kind of starting down that path sooner rather than later is definitely going to be to your advantage. And then there's the trusted advisor factor. It takes a really great set of advisors to sell your business or implement a complex tax strategy. And I think you're going to find that this year, those people are going to be in really high demand. Derek, you and I are in an advisor group together. And we heard earlier this month from everyone in that group that, to summarize, everyone had a terrific 2020. Maybe it was a record, and everyone's even busier this year. And, what that told me, my takeaway there is, again, those really good advisors that you need to implement all of these different strategies and liquidity options are going to be in high demand, and you kind of need to get engaged with them.
Yeah, I would even say you're probably late to the party, even if you're starting today. But if this is you, the listening audience, contact your people right now. If your work is going to go into fourth quarter, be prepared to possibly pay maybe 2x the amount of fees, and you may or may not get it done. So my recommendation to the listening audience, if this is you, whether it be liquidating a company or doing estate and gift planning for your family to figure out how to minimize future wealth transfer taxes, get started early.
Right. And Derek, you'll remember this, but the 2011 fiscal cliff, we ran into this same concept where the advisors, everyone was trying to rush to get, their tax planning, their gifting done before the end of the year. And all the good advisors were basically, maybe too busy to take your call. I know valuation firms at the time were charging 200, 300% premiums to their normal market rates. And, if you called in Q4 and said, I need to get this done by year end, you were maybe not getting a call back, or you were just getting a no. And so, it's to further Derek's point, you want to get engaged on this stuff now, or you may just run out of time for this tax year.
Brent, fabulous information. Tell the listening audience how they can get a hold of you if they need valuation services.
Right. So, kind of all the standard forms of communication. My email is bglova@vpadvisors.com. You can also check out our website, vpadvisors.com. The team section, I think all of our contact information is there. And then I am also available on LinkedIn and responsive.
Fantastic. Eric, why don't you wrap it up for us today?
Yeah, absolutely. Derek, I do want to say one thing. It sounds to me like this is something that's quite urgent. I mean, there's a sense of urgency in your voice and also in Brent's. Am I reading that correctly?
That's correct. I think that there is a unbelievable opportunity here, and I think that many clients who have estates, large estates, have not taken advantage. Don't miss the opportunity. It's a banner time to take advantage while all these factors are in your favor. High valuations, low interest rates, fantastic tax law to take advantage of. Take advantage before many of these things very likely will change.
Yeah, absolutely. All right. And the beauty of a podcast is you can rewind it to get that contact information. So please do that. Derek, thank you so much for bringing Brent on the show. Brent, of course, thank you for being here and giving us such great information. And our last thank you goes to the listening audience. Thank you for tuning in and listening to the Live Life Liberated podcast with the team from Centura Wealth Advisory. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when they come out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks for listening today. For everyone at Centura Wealth Advisory, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Live Life Liberated podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Centura Wealth Advisory. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Centura Wealth Advisory. Centura is an SEC registered investment advisor with its principal place of business in San Diego, California. Centura and its representatives are in compliance with the current registration and notice filing requirements imposed on SEC registered investment advisors, in which Centura maintains clients. Centura may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Past performance is no guarantee of future results. Tax relief varies based on client circumstances, and all clients do not achieve the same results.